Hello everyone, this is Ross Mullins with YourDailyAnalysis.com, and this is your free daily video. I'm going to begin the day today on the USD CAD. We're going to begin on the daily chart simply because I want to get a view of the overall trend. Since the end of 2011, you can go all the way back to the top of the chart, all the way back into September, October time frame. You could go here a little bit further into the chart around the beginning of November. You could go here into December or even into the end of December, beginning of January. Either way you look at it, the highs have been getting lower progressively. We've had a new low recently, so lower highs, lower lows recognizes a downtrend. We've put several different trend lines, incarnations of the trend, to visually give us a recognition of those trends. And that is the dominating factor here for the US CAD. Now recently we have found some support just underneath the 9900 level into the 9800s. Found some support and seen a rebound and a retrace of this trend. Any movement higher, the last 3 daily bull candles have been a retrace of the downtrend. So any move higher gives us an opportunity to sell at a high point within that downtrend. That's the most significant thing I wanted to point out. Here on the daily chart, there are several different fibs of different trend ranges that I'll point out on smaller compressions, but the biggest one that I want to show you is the one from the lowest low to the high. Using the black trend line as your reference, the black trend line shows you the range in which I measured with Fibonacci from the lowest low to the high of that black trend line. That puts a fib of that trend range right here at 99.87. So that's definitely something that you'll want to pay attention to as we get to the smaller compressions. All right, let's shift down to the 4-hour chart. There is that 786 fib, 99.87 of that larger trend range that I mentioned. We also have a 0.236 fib, 99.98. The 0.236 fib is of this trend range from the highest high that you see on a 4-hour chart down to the current low. Take fibs from that highest high to that lowest low, and you can see the 0.236 fib setting at 99.98. We're very close together, within 10 pips of each other on the larger trend range and the shorter trend range. Those happen to match up right here with the blue trend line. That blue trend line is one of those trend ranges that we recognized on the daily chart. So that trend line coupled with those 2 Fibonacci levels gives us a retracement point, a point in which the market has come back up within the overall downtrend, reached a resistance, a point of decision making when the market has to decide, are we going to change the trend, break the trend line and continue higher, or is this a point in which we're going to return to the downtrend and continue back down towards the 9800s once again? Well, my assumption is that this is going to be a barrier at this point, and as long as it holds underneath this blue line, this barrier will hold true. We've already seen the creation of a small candle body with a large wick on top. That is a reversal candlestick formation. However, we need to wait until that candlestick completely forms. This is the 4-hour chart, so we need to wait until that candlestick ends and the next candlestick begins before we can have confidence that this is going to be that indication reversal indicator that we would expect to see. So we have to wait for the next candle. We can't make that full assumption yet that this is the reversal candlestick until that next candle, because over the next several minutes before this candlestick completely ends, it could shoot straight back up and end up not that reversal indicator that we're looking at right now. So but the assumption is at this point the blue trend line is your reversal ceiling. This is going to be resistance for the day. We have 2 Fibonacci's to back that up. If it does fall back here to 99.67, there is some support that would be expected there. Beyond that, Fibonacci also sits down here. Well, not Fibonacci, but a retracement level sits down here at the 50% at 99.43. That is the 50% of this range. We will take fibs of this range also. There is an overlap of fibs of right here into the 99.20 level, and then all the way back down here into 99 or 98.80. And of course, these are the fibs of this range. So we need to take fibs of this range here, just to get an idea of where the fibs are of this trend range. So let's do that. And what I find interesting when I do this is when those fibs overlap. And gives you some confidence, because remember, Fibonacci is showing us those naturally recurring patterns out there throughout nature, not just the market, but throughout nature. So if those naturally recurring patterns begin to overlap of different trend ranges, you begin to have confidence in those levels. Here at 99.88, you see some overlap. That's when those dashed lines are on top of each other and the numbers are garbled on the right-hand side. You see some overlap here at 99.70. You see some overlap here into the 99.40s. You see some overlap here into the 99.20s. All of those levels become potential support barriers on the way back down as it falls off of the trend line. So these become targets. Your first initial target here at 99.70 on the way down from the trend line. So if you take a sell here, based on the reversal, based on the trend line, these become profit targets, or at least places to begin to manage your trade. 70, 45, 20. Those are places to manage your trade. Either lock in profit, move your stop, close profit. All of those are those points in which you'll do that, even all the way down into the 98.80s. The 236 fib of this trend range sits down here at 98.80. Beyond that, you go all the way back down to the low, because if the trend is going to continue, if the downtrend is going to continue, what's your next targeted spot within that trend? Well, you're expecting to see a new low, because the trend has lower highs and lower lows. So if you're going to expect to see a new lower low within the direction of the trend, it's got to break this last low and make a new low, potentially all the way down here into 97.80s. 97.80s. There's some Fibonacci extensions of the trend range here at 9784, so that becomes the 1.27 Fibonacci extension and a target if it breaks beyond this lowest low here. So hopefully we'll see that happen from the reversal from the trend line, and a target for a new low to be made within the direction of the current trend. Thanks for joining me for this free daily video. If you would like to subscribe to my premium service where I cover analysis for 7 major currency pairs every day, you can start your 10-day trial by clicking the Get Started button below. And feel free to leave any comments you have about today's video in the comment area. Have a great day in the markets.